Right, James, thank you for joining us on the podcast. If we could just start by you explaining a little bit about GTA accounting and where you're at with that and introduce yourself, that'd be great.
All right, so I'm James Gorsborough, and thank you for having me on your podcast today. So we are known as GTA Accounting, but this is our new name. We've rebranded about 6 months ago. So our registered name is Garrett Adam Accountants, but we took on another practice about a year ago, and off the back of that went for a rebrand. So we decided to incorporate the first letter of that practice and have a play on Grand Theft Auto as well.
Okay, nice. Can you tell us a little bit about GTA and where you're at as a business?
Yeah, okay, so we are a general practice. So we do pretty much everything that you require us to do, which would be your accounts, your personal tax, corporation tax, VAT returns, payroll. We do management accounts, cash flow projections, budgets, and we do a lot of business advisory, which we go in and do outsource FD roles, and basically we are the sounding board for our clients.
Okay, nice. Do you have a ballpark figure on how many clients you currently have on board?
Yeah, so we have now about 356 clients. Jesus,
I wasn't expecting it to be that much. And how many staff as a company?
So we have 7.
Nice. Okay. Okay, cool. Based on that, I'll ask it to everybody. What does success mean to you?
I think success to me is where you can accomplish your goals. And that can be whether you want to have a nice big amount of money in your bank, or whether that's to be whether you want to have a lifestyle that is where you need to be. I know some people define it as literally as the amount of money they've got. But to me, it's like you have your goals, and if you achieve them, that's success.
Okay. So based on that answer, when would you say was kind of an early success for you?
Success for me was, I've had it a couple of times actually in my short life as a business owner. Obviously, I had another business, I got hurt, and I then retrained as an accountant and qualified, and that's something I never thought I'd do. So to me, that's a success, bearing in mind how bad at maths I was at school. I say that with a joke. It is a joke, though.
No, that's fine. What made you retrain to be an accountant?
So when I was at school, I was always interested in business. It stemmed from the fact that I used to hate reading a book. So my parents got me to read a newspaper, but I did it from the sport. Read the sport,
the back
pages, and then you work your way through, and then the next part of that is the business section. And I used to start reading about, well, what does this do? What does this mean? And so my heart was always sport, but my head was always starting to think about business. But I continued following my heart, which was to be sport. And I went through college, university, and I then qualified with a sports science degree and went into sport coaching. When I hurt myself and I got told I couldn't do any sport and basically couldn't do my job anymore, I then decided to retrain as an accountant to work with businesses.
Okay.
And that's how it came about.
Okay. If you liked business as a whole, why didn't you start a different business? What was the reason for going down the accounting route?
I think because of I keep playing like I'm playing a violin at the moment. The injury I had, I knew I needed something that was going to be transferable to either be something that I could do by myself, or work in a practice. Hence accountancy. I could become chartered. I kind of felt that if we were ever going to start a family, it'd give me some security.
That's very important. That's a fair enough answer. One thing I'd like to debate, because I think the pod will have mostly entrepreneurs that aren't accountants on it, is from an accountant's perspective, what makes a good accountant?
What makes a good accountant now is probably very different from it was about 10 years ago.
Okay.
Like an accountant now needs to be able to advise to businesses and understand their client's business very well. So it's about being face-to-face, present, and a sounding board, as I just mentioned a bit earlier. They got to be there to help their clients all the way through the business journey, and not just be doing the compliance, which we'll never get away from.
Yeah.
But there's much more to it now.
Okay. How do you think that differs from what a company owner thinks makes a good accountant? Because all the things are obviously important. But if you were to ask someone who's not an accountant, that's a company owner, how do you think?
I think there's still that persona that an accountant's a very stuffy, suited and booted person who will be telling you off for doing something that you didn't know you were doing. The reality is, it's far from that. What we've always tried, I've always tried to say that we're on your side of the table. It's quite a cheesy.
But I've heard it a lot. Yeah, your accountant should work for you, not for the government.
Yeah, and we're, yes. So they need to be. I mean, there's so much people do, and like I said, they can just literally say, "Here's a set of accounts. Here's your tax return. Sign the dotted line. This is what you've got to pay." But there's much more to it in terms of the planning and understanding the growth. And we as a practice at GTA actually call it a roadmap. So we want to define where you want to go. Why do you have this business? And when you start talking about that, I think it opens a few business owners' eyes, and they're like, whoa, hang on a minute. I didn't think accountants did this. So it's quite interesting. I think from a business owner's point of view, that an accountant will just always be doing the compliance.
Yep.
The reality is now is there's just much more we can do for you.
Okay. When you talk about doing more than just the accounts, advising, and like say the roadmap, do you think that makes it possible for an accountancy firm to earn more money in comparison to if they were what you're considering more old school?
Yes. Yes, but it's providing a value for our clients.
I'd 100% agree from my perspective. Yeah,
it's literally it's the way the industry is going to be going, and for us, it's going to be able to, if we can provide you with more value, we ourselves can earn more.
Yeah, I agree. Now, I don't know how much of it you see. I'm sure you see as much of it as I do. Now there's so much content going out, and more reels on what your accountant should be doing, how to save tax.
Yes.
How does that impact you as an accountant? Do your clients come to you and say, "Oh, I saw something on Instagram"?
Yes. No. I do it myself. So I'm quite big at pushing things online. It's something different. What's out there at the moment is a short snapshot of what the truth is. So when clients do come to us and say, "Oh, I've seen this, and can I do this?" It's like, okay, so there's a bit more to it. So there is that side of it. It's great. It's making people more aware. But as I said, it's just a snapshot of what you can truly do. And then the thing is, I'd always say, make sure you do talk to your accountant about it. Don't just see it because you see it online. It's got to be true. Yeah.
The one I've seen quite a lot recently, which is not true, but people saying they can earn like 100 grand a year and earn 3 grand and pay 3 grand in tax, but they're putting 50 grand in a pension. It's like, well, that's not in your pocket, is it?
No, it's not. No, exactly. And it's the headline things that make you want to watch the video.
Everyone clicks on it, watches it. Yeah, definitely. If we were to go back, if we're starting a business, at what point would a sole trader or somebody running a business need to register with HMRC for tax?
So if you're looking to do, a lot of people will start off because they're doing a side hustle. They've got a job and they want to earn some more money. So the first thing is they have a side business. Once you start earning over £1,000, then you have to register for self-assessment because you can earn under £1,000 and not pay any tax.
Yeah.
So that's the first protocol. You have a sole trader, and you need to let HMRC know that you're earning income, and obviously that then tends to normally grow into something a lot bigger for a lot of people.
That's the plan.
Whether it's a tradesman, it's e-commerce, or sports coaching, tutoring, marketing, consulting, so many things. Obviously, when you're by yourself, you're doing so much. When you're a sole trader, then some people rush into be a limited company.
So what would make somebody pick to be a sole trader or a limited, and what are the reasons for that?
I think if they know, if they're rightly advised, then they could, if they got a lot of work on to begin with and know that they're going to be earning good money, then the limited company is probably the way forward. But also is the nature of their trade as well, because obviously being a limited company allows them to be separate from the person. So it's a separate legal entity. It gives a bit more security. It protects the personal assets of the individual who owns the business. Whereas if you're a sole trader, you're personally at risk for everything.
Yep. So what's the benefits of a sole trader?
Benefits of a sole trader, less compliance.
Okay.
So with being a sole trader, it's less compliance, which means at the moment you only have to do 1 tax return a year. But from 2026, that's actually changing, and you've got to do 4 reportings a year.
Oh.
So it doesn't mean you're paying tax 4 times a year. It just means your HMRC are aware of your income, your expenditure, and your profit.
Yeah.
4 times a year, and then you do your final submission, which is where you do your full declaration, which is kind of your final tax return, and then you pay your tax.
So what's the reason for needing to do it 4 times a year? So they know if they get more money?
It is essentially data grabbing. But
Okay.
it's called Making Tax Digital. It's a income tax self-assessment.
Okay.
A lot of people aren't ready for it. A lot of accountants don't tell their clients that
A lot of self-employed people just
they
6 months after their accounts are meant to be due, they go.
yeah. So it's done because there's it's so the government can kind of know what's going to potentially be coming their way. Payroll, which obviously I know is obviously to do with PAYE, that's what's called real-time information RTI, and that's done monthly, so they can kind of see where people's taxes are. And when it's self-assessment, it's been really hard when it's for them as once a year just to see where people are at, especially also with the way universal credits now work as well. So they're just trying to make things more modern. Sole traders are, at the moment, less compliance, but going forward, there's going to be more, which means there will be more costs because it means more things are going to be filed and people need to check it.
Yeah.
They're going to have software to do it.
So do you think that will push more people just to go limited?
I don't think so, no, because if they're advised correctly, then no need. I mean, there's some people made the jump from being a sole trader limited company too early at times because someone's told them to do it, and they like the idea of being a limited company. And the reality is that it's more expensive because you've got not the compliance costs that come with it, set of company accounts, corporation tax return, annual confirmation each year to say you haven't changed your share structure and things like that. Plus, if you are taking dividends and income from that company, your own personal tax, that pushes up costs.
Yep.
Whereas at the moment, you've just got a single return to do every year. So, and to be sole trader to move into a limited company, you need to be, you need the profit level to be at the right amount for it to work.
Yep. Okay. So if someone's got a good income, they don't want to have full liability, they're going to become limited. When you're a limited company, what kind of different taxes are there then to pay from turnover all the way through? Okay,
so something we also I think was with sole traders, you could be VAT registered.
Okay.
Yeah, so you can still be a sole trader and be VAT registered. No, normally, if you don't have the profit level but you're VAT registered, some do become limited company anyway. Something I forgot to point out, but because it means it's just nice security. If something wrong, the company takes the rap and not the individual. Limited company taxes, well, they've got corporation tax.
Which is how much?
Well, so if your profits are up to 50k, you're paying at 19%. And if you start going over 50k, it's 25%. It's up to £250,000.
Yep.
But it's also there's something really geeky called the marginal relief, which means you actually have an effective rate. So you kind of it stages up till you get to 25%.
Yeah.
You have obviously VAT, and if you're a limited company you might employ people, you could have PAYE and stuff to be paying over. Employers' national insurance, which again, a sole trader, if you need, that could happen as sole trader as well, but more than likely it'd be in a limited company.
Yeah, that's fine. That's fine. If we make it really simple and break it down for people to understand how that comes into effect. So if a company make 100 grand in profit, what will the taxes look like from that profit?
100 grand of profit from the limited company?
Yeah.
So, well, the fair 50 is taxed at 19%.
Okay.
And after that, it's at 25%.
Okay.
So you kind of work out, it's actually an average.
Yeah.
19. So I would say that would roughly be about 22.5%, 23%, I think. Corporation tax. Off the back of my head, don't quote me on it, please.
That's fine. That's cool.
Yeah, but that's essentially it. Yeah.
Okay.
That's potentially the tax bill you could be receiving on it.
Okay, that's fine. And then if you're the director of the company, let's just call it 23 grand, you're going to then be left with 77 grand. That 77 grand, or as a director, let me re-ask the question. As a director of a limited company, what is the most tax efficient way for them to pull money out of the business?
So we would always advise that you have a salary, and we'd use that at your personal allowance. We were we were looking this year actually to just see if it would be better off to have it as a higher salary because of the way national insurance is actually rates are dropping and the way that dividend allowance is decreasing as well. But off the back of the recent announcement, it's actually just better to keep it at 12,570, and then to take the rest as dividends, and potentially put something in the pension pot. But we always try and weigh up with the directors when they want the money. Do they need it now? Do they need it later? 9 times out of 10, they want it now. So you're kind of preparing them for the fact that you're going to have a certain amount of basic rate, and then you got some of it in a high rate.
Yeah, it's fine. So the 12,570, why is that
that's
to
the
make it really
that's
clear?
The personal allowance.
Personal allowance, but what does that mean?
So nothing's paid, no taxes paid on that.
Yep.
And essentially, but also you got two hats, because you've got to think about the company as well. So if you have a lower salary, company pays more tax. You have a higher salary, company pays less tax.
Yeah, so the salary comes out before corporation tax.
Yeah. So that's the point. So there's two hats to why we're trying, or what we're trying to achieve. But having the basically on the personal allowance just means you, as an individual, aren't paying anything on that income. So you've got a nice chunk coming your way without paying anything.
After the 12,570, how much can a company director earn at the basic tax band from their dividends?
37,700.
And then what happens after that?
And then after that, the remaining amount is at the high rate tax, which is 33.75%.
So that is obviously when anyone who's in business, that is when then people start to do smarter things with their money.
Yes.
What can people then do with any profit after that, Barry, if they don't want to be paying the higher tax band?
They want to pay higher tax. So then you're looking at structuring the business. So okay, we look at it and say, do they need that money? Some do. So that's inevitable that they will have to pay some taxes. But if that's the case, then they could actually contribute to their pensions personally, which moves their tax bands, which means then they're paying more tax at basic rate. But we always try and make sure that the business can pay the pension contributions, because if it has the cash to do so, just because the company can get the tax relief. So what actually benefits the owner of that business is we're diverting profits into the pension pot, paying less tax, which then means the tax that the company could have been paying ends up in the director's back pocket. So just to be clear, the pension comes out before corporation tax. But if it comes to the business, yes. And but it all weighs down to what the individual wants from the money. Some earn 100K, so you plan them for that eventuality that this is your tax going to bill. So for the first year, it could be quite high, because you got the balancing payment plus the payments on the account, which the payments on the account which catch people out. Okay, can you explain the difference? So payments on account are where you start paying in the future. So when your tax liability goes over £1,000, you got to pay 6 months up front, and then another 6 months. So it goes towards your next year's tax bill. So the balancing payment is actually your tax liability, and the payments on account are then calculated on the tax liability divided in two. Okay. So you're kind of paying like 18 months of tax up front if you're not careful. So that's what you've got to really plan for it, because then year 2 you benefit. Because if you have the same remuneration, you've already paid a huge chunk of your tax bill off, and then you're just continuing going forward. Okay. That's, way above my pay grade. Is the maximum amount you can put into a pension per year? So if you're, we're looking at it from an individual or as a company? Oh, both. So as an individual, if you're sole trading trying to pay into your pension pot, you're capped at what your taxable earnings are. If it's a company that's going to pay into a pension pot, it's £60,000 a year. But you also have the carry forward rule, which means if you have unused allowance from a previous year and you've had the personal pension set up previously, you can carry that forward and actually pay more in. It adds on to the allowance. And how many years is that for? 3. If a company director sets up a private pension and then 3 years later hasn't put any money in, how much money can they put in 1 year? Well, so it's 180, isn't it? Okay, that's fine. That's cool. But we'd always try and we'd always try and make sure that something's happening each year, because it's a tax saving that's happening for it. And don't do what we had a horror story recently where we were made aware. They're not a client of ours, but we were made aware via another accountant. We know that they took on a client, and another accountant had told their ex-client to put into a pension pot, and basically put all the cash in the bank into the pension pot. But of course, they didn't think about the the operational cost of the business. So
sure, that's not just the accountant's fault. Sure, that's the business owner as well.
There is that, but the reality was the person was like, but they told me to do it. So there are. You have to really think about it, because it's great that you might have £60,000 in your bank and you think, great, I'm going to save this amount of tax. The reality is you need money as working capital for your business.
Yeah. So if somebody's employed with a business and is on PAYE, they're putting into their pension pot, their money at the end is tax-free. But as a company director with a private pension, if they've got £500,000 in at the end, what are the tax implications when they go to pull that money?
It depends. So obviously they've got auto enrolment. So yes, most staff have, or most employers will have an auto enrolment in place, and they'll be paid. The state pension is always the one that's the personal allowance is offset against.
Okay.
And the other pensions, they potentially could be taxed.
So so if as a company owner you've got, I don't know, let's say by the end of your career, £500,000 in your private pension.
Yeah.
When you go to use it, what are the tax rules then on that?
So at the moment you can draw down 25% tax free. So you can bring down a lump sum.
Is there a cap on that?
And it's 25%. You can do it. You can basically apportion it until you reach that 25% limit, or you can do it in one lump sum.
Okay.
So, I mean, this is a little bit more even into financial planning.
Yeah.
So that's where financial advisors come into it.
I think it's good to be aware of it, because someone might just think, I've got all that money in my pension.
Yeah, no,
I'm sorted.
I get that. You can draw down 25% tax free, and then after that, you're going to start paying. You basically, it's no different to a pay slip. They pay the money, there's the gross, there's the tax taken off, and then you're paying tax on it.
A question that a lot of people ask, particularly my friends, is what expenses can you put through your business?
So if you are a business owner, you can have, if you have your own vehicle, then you can definitely claim the mileage for your travel, but you can't claim it when you're going to your own office, because that's a permanent base. So if you're going to travel to see clients or sales meetings or networking, then yes, you can put that mileage through, and that's at 45p for the first 10,000 miles, and then 25p after. You've then got, if you don't have an office, you can have you use your home, you can have use of home, and you can claim obviously then the light heat rates of those. If you are, you could, if uniform, if you're putting something through, but we always sort of say try and have the branding of the company name on it.
Yeah. So, for example, you've got a good example on you right now.
Yes.
You couldn't buy just shirts and suits.
You can, but then it's always where that holding exclusively rule that HMRC look at. They could say, well, there could be some personal use out of this.
Yeah, of course.
So there is that. So you've got business, you got mileage, you've got use of home. You can put through private healthcare for the business. Obviously, that is a benefit in kind. It means you have to do a P11D, which is another bit of compliance, and the business pays some class 1A on it. But we always say, like, it makes sense rather than it coming out of your back pocket. The taxes that you're going to pay in it actually far outweighs what you're paying towards the.
Is that the same for life insurance?
Yeah, life insurance you can do exactly the same. That can go through the business, and that's not a benefit in kind.
Okay.
So that's again, so those sort of things you can put through as business expenses. Traveling to Disneyland, no.
But that does lead on to we can skip a few questions. That does lead on to one that I had. So again, at the moment, if people are just looking on socials, they'll see lots of people flying abroad for masterminds and trainings and linking it to business and things like that. What are the rules around that? There must be a line.
So there is that. Yeah, there is. I mean, all these events are held in these nice prestige hotels. I think Dubai is quite prominent at the moment. I'm seeing on my social media. And they call it like training events and things. If it's truly what your business is in, that industry, then it could be an allowable expense. The reality is HMRC view it as there's probably some personal time as well. So we call it R&R, rest and I can't remember the word, but essentially you might have to apportion it to be on the safe side.
Okay, so by that you mean not claim 100%? Not
claim 100%. Obviously, the business can pay for it. And you might have 75% of it put through as a business cost, and the remaining 25% is personal use, because whilst you're out there, you will have some downtime.
Yeah.
It's all about how it's presented. So I've seen it before where, someone's got a consulting business, and then they've gone out and done a training program out in America for this is an example like property, but it's like, well, hang on a minute, you consult. That's when it's not like it's completely different to trade.
Mm-hmm.
So if they were looking to start up a property business, then ideally that cost should be over here, not in that business over there. So yeah, I'd always say that we know it happens. It's just how realistically is it 100% for the business.
Mm-hmm. But in theory, you can go away.
Oh yeah, absolutely.
Do the training event, and go for the business.
Yeah.
Just don't take the mick.
Yeah. I mean, if it's I think there's quite a lot of gym instructors going out and doing going out and doing these networking things, which is great. But when they're posting on social media about the lavish events they're attending in the evening, it's like that's and they've been told, put it for your business, and then you sort of think HMRC are wising up to that.
Yeah, be clever what you post.
Exactly. It's the same. Yeah, it's the same. It's no different to having you're buying a vehicle or something, and then you're posing it as if it's your own personal vehicle, but actually in the business you're classing it as a pool car. You've got to be so careful.
Yeah.
Because that's how they catch you out now.
Yeah, no, makes sense. I saw one the other day that someone I follow, and they do run an ice cream business, don't get me wrong, but they posted a picture of them on a plane saying they've got a week in Italy to go and try new ice cream flavours.
I mean, that's potentially one so that you could present that as that is actually a business trip in essence, but unless then they're following up by bringing the ingredient, but they're buying the ingredients from Italy constantly.
Mm-hmm. Yeah, massive smile on his face. I was like, okay, fair enough.
Great for now these days. It's all about the content, isn't it, and how it's looking.
Yeah.
Reality is people just got to be more aware of the risk when they're doing this.
Yeah, no, of course. Cars. I find this an interesting topic. Commercial vehicles.
Yes.
I'm aware it's always changing.
Yeah, yes.
I follow a whole bunch of people that have got 4-door Defenders.
Yes.
With back seats.
Yes.
Is that fully tax deductible?
So it depends on the tonnage of the vehicle. So over a ton, and it's deemed to be a commercial vehicle, but they're actually the rules have changed on things, well, especially on pickups now. Mm-hmm. So pickups are now not a commercial vehicle.
Yeah. So you won't see every man and their dog with a pickup soon.
No, you won't see. No, and Defenders, they need reality is it should be. The back of it should be like a box. I say a box, it's like no back seats.
Yeah, like a van.
Like a van, and then that's a commercial vehicle. But everyone's willing, we know people will push those boundaries. HMRC know people are pushing those boundaries. Mm-hmm. And so there will be more, they're putting more people out there to check.
Yeah.
So at some point, it's going to come around and bite them.
Yeah.
So again, it's what people post, and
that's the thing. I've seen loads of it. Like they're out with their family. They've all gone to an event. They've all got a Defender. And it's like, okay, they've all got a Defender for a reason here. They haven't coincidentally all got a Defender.
No. So there's a fine line. So I'd always say if someone's looking to get a vehicle like that, you check on the legislation, talk to your advisors to make sure that you know correctly what you can claim. Mm-hmm. The last thing you want to be doing is thinking you're buying something, committing yourself to quite an expensive outgoing because you think you're saving tax, and the reality is you're not. You might not. Mm-hmm. So
that's fine. Electric cars. What's the tax implications on an electric car?
So electric cars at the moment is still, if you buy a brand new one, you've got first year allowance. Mm-hmm. If you buy a used one, although it's new to you, you don't get the first year allowance. So you don't get the full cost of it up front to offset against taxable profits. Mm-hmm. So it's apportioned 18% on a reducing basis each year.
Yeah. What's the benefit in kind tax?
So at the moment it's 2%. It goes up to 3% next year, and then each year after that it'll go up 1%. But also one thing that can catch people out now is from April, electric cars are going to be taxed as the same as petrol and diesel, which was in the budget.
Yep.
Which I think a lot of people were a bit miffed about.
Yeah, especially bear in mind, as far as getting electric cars on the road outside of businesses, that's slowed down. It's not got faster.
No,
Is,
down to infrastructure though, isn't it?
Yeah.
It just can't. They can't get the charging points ready.
no, that's fine. That's fine. Big topic right now. We're in December. Christmas party. What can and can't a company director put through the business for their staff on a Christmas party?
So if you're doing a Christmas party, the limit is £150 per head.
Are you restricted in what you can do with that £150?
No.
They can have as much alcohol as they want.
Yes. Just as long as as long as it doesn't exceed £150 per head.
Okay.
After that, it becomes it's a benefit in kind.
Okay.
Which is where, to be fair, most businesses will sort of say to their employees, we're willing to put the first £150 in, and after that, you contribute. I've seen that quite a lot, and employees buy into it because.
Well, you're not going to say no to £150, are you?
Well, the first £150 goes a long. Well, does it go a long way now? I don't know with food and drink, but the point is it's those are the rules on Christmas parties. I mean, if some businesses are remote, but they can do it you can actually go and get a Christmas hamper and send it to your staff, and or have an online party. Some like to do it more and more. It's now back face to face, isn't it?
Yeah, we do it all in person. If you've got PAYE and you also use subcontractors or self-employed staff, what is the difference between the two, and pros and cons?
Okay, so PAYE is where income tax and national insurance is deducted at source off their earnings, and then the employer will pay it over to HMRC. So the NI contributions go towards things like the NHS and state pensions for later on in years, and subcontractors just means they're got to look after their own tax, so they're responsible for paying their own taxes, and there needs to be a simple subcontractor agreement in place where you're agreeing to contract your service, so they're going to contract their services to you. Employers can obviously dictate the hours and determine and give them equipment. Subcontractors ideally should be using their own equipment.
Yep.
And shouldn't be dictated with hours. They should just be told there's a job to do, and it's up to them then to get it done. Reality, as we all know, is some people will say, you've got to be here at this point, and here's some uniform, and you're representing this company, and this is what you're doing.
What's the benefit to a company of subcontractors? Because your answer originally makes it sound like PAYE is by far the better option. So why do
but the benefit is it a benefit? So you don't pay employers national insurance on it,
which is what percent now? So
that's up to 15. I think it's dead on 15. I think it's about 15%. Around about 50, it's going up from up to 15%.
Yep.
Or not a bit higher, and that's quite a lot. They've also reduced the NI threshold, so that's going to catch a lot of. So from 9,100 to 5,000. So you're going to pay NI a lot earlier as an employer. Yep. What they have tried to do is say, well, actually, the national insurance allowance which each business has goes up to but reality is, if you have a lot of staff, that's gone. That's gone within a month and a half, and it's going to be very costly to have staff. So, but having a subcontractor just means you're not paying your employer's national insurance. But there is a risk to that, having subcontractors, because you can't really control them, and they don't really you can't install like a notice period.
Yep.
They can just go. Whereas staff, you have that bit more reduction in risk.
Yeah, and consistency.
Yeah,
which a lot of business owners that's what they want. No, that's fine. Cool. I don't know if you want to answer this one, but I'll still ask it. So, for your clients, what's the biggest tax saving you have made them, and what did you do to achieve it?
There's been a couple. The biggest one we've done was, so we do as a practice research and development tax credits.
Okay.
So we basically did a R&D tax claim for a client that got them £100,000 back.
Nice. So
it was a massive project. It was something completely different and outside the box. Sadly, the business failed. So the point is, it failed later on. But the point was, they went for a whole R&D project to try and get there, and they just unfortunately ran out of money. They couldn't get investors involved, and but it was an interesting idea about creating energy from movement, essentially is the way to describe it. So it's another way of like you got your wind turbines and you got your solar panels and things like that. This was actually like an energy creating system. So we did for them, and also we did for an IT software company as well. We've done a huge another R&D claim for them, and not quite as high as that, but it was they developed their own software programs for a lot of the letting agents, and so that was quite nice to be able to, because part of R&D is it's over the last couple of years had quite a bad reputation for there's quite rogue firms that just put a claim in no substance.
So what is R&D?
So research and development.
Okay.
So it can be something that can enhance you as a business. You've invested your staff's time, you've created something internally that no one else has done, but actually the whole industry can benefit from. So, for example, like you've got a coaching business, you might have decided to have a booking system.
Okay.
Create your own booking system that it doesn't exist, and you've had to build it from scratch because there's nothing out there that was able to do it. But what it now does is it means other business, it's actually allowed the industry to go to another notch. It's not just yours to keep.
Okay. So how does that save account tax?
So how does it save tax? So you obviously have the cost to build it. Mm-hmm. That could be your staff's time, which you've got to record. Could be using third parties, which you have to prove why you're using them and why you needed to use them and not got it internally to use. Mm-hmm. Again, it's their time. If there's any consumables that has to be bought to build it or make it. So if it's software, it's a bit more. That's more computers you're going to use, but with manufacturers, it might be the consumables to build a piece of equipment. And then that obviously sits in the expenditure in the company, and you get that in your P&L anyway. But when it comes to the R&D, it's kind of stripped out and given another top up. Yeah. And then so what that means, the extra top up means you then expense it back against the taxable profits. Oh, okay. So essentially, what it does then is it you can reduce your tax bill, corporation tax bill, or if it generates enough taxable losses, you can actually ask for a refund, which is reduced. It's not the same rate as corporation tax. Years ago, it was 14.5%. It's all changing now. Or you can roll the losses forward and save tax in the future profits. So, but the project can only be a couple of years long. You can't have like a 5-6 year project, because after that point, they just want to see what are you doing? Yeah. Why is it not finished? So we did that. That was nice to be able to help them. And then I think in all terms of as a business, other side of it, taxes would be when we took on the client, identified that they had all their invoices duplicated. They duplicate their invoices. So the profits weren't there, which weren't great, but I mean, historically they paid too much corporation tax, so we're able to bring that back. But also they'd overpaid in VAT, so they got that back. Jesus. So from that point of view, it's not great when you have to identify these problems. Mm-hmm. But when the other side of it is you see them, the thankful how the business owners are, it's really important.
You save people tax, they're always going to be happy. Obviously, every company is different. Where or what is the most common area you find in businesses to save them tax in their business? So if it's a new client, what's the most common place that you normally save people tax?
Definitely corporation tax.
Okay.
It's the most first one.
But from what is there is there quite a common thing that people miss out on, or that you address?
Yes, potentially it could be something like business expenses put through that we talked about earlier. The mileage, if they've got a personal vehicle, could it be private healthcare? Could it be life insurance? Use of home? Yeah. That sort of thing, or pension contributions. That's the first thing we can really make a difference on. VAT as well, understanding what can be claimed back on the VAT if they're VAT registered businesses. And income tax is very much a little bit similar to sole traders. Again, a little bit use of home, mileage.
So just maximising those expenses before the corporation tax comes in.
Yes, it's making sure that they're aware of what they can take out that actually can bring down the corporation tax.
That's fine. Dubai. Is Dubai the answer, What are the pros and cons, and what is your opinion?
Okay, yeah, it's massive on social media at the moment, isn't it? It's have you been out there?
I've been out to Dubai.
Yeah,
Not for business. It was a holiday.
Same here. I love it. It's amazing. It's at the moment, and the way things are going over here, it seems to be the way forward because of at the moment there's no taxes out. Well, there's no taxes out on your income tax, but if you set a company up there, the rules are changing very quickly, from what I understand. So we don't deal with that, but we have. If people want to do that, we obviously then would move them on to advisors that deal with that, relocations out there. In terms of like weather, yes, I think if you can earn out there and have the weather, that's amazing. But equally, then comes with the legislation over here as a UK taxpayer. You're still a UK taxpayer for a certain point of time. So you have your residence tests and all that sort of thing to go through from a tax point of view. So it's not always just as straightforward. It's quite it needs to be a well executed plan.
Based on the fact that you have to spend a certain amount of time in Dubai, I believe it's 3 months or 6 months.
I think so. Yes.
Do you think it's something that's different for younger people or single people, and in comparison to someone that's got a family?
Oh, very much so. They can just up and go.
Yeah.
When you have a family, it's the fact that, well, like myself and you've got children, so it's the outside family members who don't get to see them. You're ripping them apart. But also with my daughter, she's at school, so I'll be taken away from her friends. As much as kids are resilient and will always make friends, you are changing your life quite dramatically. So if you're single, come with less baggage.
Obviously no one knows, but if you had to predict, do you think it will continue the way it is? So do you think we'll be sat here in 10-15 years and the Dubai transition will continue? Do you think it will be a phase?
I don't think so. I think at some point those rules may change. I don't see so at the moment it's all to do with the wealth of the country that's allowing people to move out there and pay no taxes. But the more that do it, the more strain it becomes. It's a bit like over here. We're living longer, so the NHS is strained. So over there, the more people go and live over there, at some point they're all pushing for people to not use oil. All this energy things that are going around the world and carbon footprint. So if they're not producing oil, where are they going to get their wealth from? So the people living out there will start having to contribute towards the state. So I believe it will change. Whether it does, I don't know, but it's food for thought.
Okay, that's fine. If we look at selling a business from an accountant's perspective, do you believe everybody to look to sell their business before they retire?
Yes and no, is the answer. Because some people just want to stop immediately and that's enough. Some obviously want to sell and carry on doing something. So if they want to retire, then yes, I would suggest then sell up. And then again, it's a plan needs to be put in place so you can understand the ways of extracting out the monies before you close it down. Because if your business is over, shareholder funds is over, if you're a limited company, sorry, and your shareholder funds are over 25k, you've got to get liquidator involved. And if it's under 25k, just call what's called a DSO1 and you can get it struck off. So a plan needs to be put in place how you can extract the monies out. It's like almost like a plan over a couple of years before you close it down. And as a business owner, you get certain elements of relief as well. The business asset disposal relief used to be the entrepreneur's relief. So again, if you hold your shares for more than a couple of years, then you're entitled to this relief. But again, this is all changing the percentage that you're going to pay your tax on. At the moment, it's 10%, and it'll go up to 14%, and it will go up to 18%.
Jeez.
So planning is key to this because it could cost you money just because you want to retire.
So if someone's looking to sell their business, and they're happy to wait 3 years, what things do they need to put in play in the years prior to selling?
It would be an extraction of profits. So how are they going to get the most out of the profits in terms of into their back pocket? Because obviously when you sell a business, it's valued at different things. You can do it on your customer list 9 times out of 10 in the EBITDA, which is earnings before interest, tax, depreciation, and amortization. that is kind of the most common way of people to value a business on a multiple based on, and the multiples based on your industry. So those it's important that you're trying to exit your business but also earn from it.
Yeah.
So you're increasing your earnings, but at the same time ensuring you're not crippling the value of your business, because there'll be add backs when it comes. So add backs being that if you're putting into a pension pot, those pension contributions are added back to the profit, which will increases the EBITDA value.
Yep.
So yes, there's ways of doing that. If you're just looking to close down the business, then you're looking at a way of extracting the profit, but trying to bring down the shareholders' funds to essentially strike it off. And then it's what's called a capital distribution, which then the business asset disposal relief will come into play.
Okay, we'll go full circle. Can you explain to me why someone would put a holding company in place and how that works?
Okay, so a holding company creates obviously a group structure, and there are various reasons why you can do that. So you might have original business, that's the trading entity, but you might start looking at other means of other avenues of business. Having a holding company, so okay, for example, you have your trading business, let's go back, and you want to have your own premises. It makes sense to have the premises in the holding company, so you're ring fencing the assets, and then the assets that are in the trading company as well can be hived up. So essentially, the trading company is just trading, and the assets are owned by the holding company. And if something was to ever happen to the trading company, the assets are secure. They can't be sold to pay off any debt, if there is any debt. So that's your one advantage of the holding company. And like I say, I've said you can look at other business avenues, set up other companies that come within the group structure. You then got the opportunity to lend between the companies nicely without tax implications. You could surrender losses. If one's a loss-making business, you can surrender losses within the group to the highest paying tax business. But also you can centralise a lot of the costs. So you might have the holding company with holding, or have the finance department in, and that's the finance department and for each company, and you don't have to pay. You haven't got a finance department in one company and another company, so you are simplifying the cost structure. That's basically how the holding company can work for you.
Okay, so then if we go back to selling a business here, we've got a holding company.
Yeah,
we've got 3 businesses in the holding company. If one business sells, let's just make the numbers easy, for £1 million.
Yes.
What options do you have then? So
effectively, the £1 million goes into, you're selling a subsidiary for £1 million. That £1 million goes into the holding company.
Okay,
and that sits there in the holding company. So that means you've now got a lump of cash. So the company will always pay a chargeable gain, which is very much like a capital gain, and an individual will pay a chargeable gain on the sale of its subsidiary.
Okay, so the £1 million now sat in the holding company?
Yep.
What are the options from there? What tax implications do you have? What options?
So the company will pay corporation tax on the sale of its subsidiary.
Okay.
And that's included on its annual return. But you've now got a pot of money, you can look to draw it out as the owner. Obviously, you take £1 million out, you're going to pay a lot of tax. But
if you're paying corporation tax, you wouldn't have £1 million in the holding company, would you?
Obviously, it'd be net of the corporation tax, but you're selling a subsidiary, the holding company will have to pay the tax.
Yeah.
On essentially with the cost, so you take the gain. It's paying on the gain, not the full $1 million, because there might be 10,000 shares that have been hived up, exchanged or bought for in the subsidiary. So you've got a net difference. The gain will be on, but that £1 million is now sitting there, and you can use that to fund other businesses, or you can use that to draw out and for the owner.
Yep.
Put into a pension pot. All these sort of things we talked about. Not the whole $1 million, because you've got a lifetime allowance on the pension, but those sort of things you can do. So it enables then, so I say it's a plan to how to bring out the £1 million.
Yeah.
But essentially, it's ring fenced in the holding company.
Yeah. What are your thoughts on the most recent government announcements in the budget?
Very harsh on businesses. It seems that they seem to be, business owners are not working people. which is for me the wrong way of looking at it. I think we're the very ones who make the country tick, and if you're going to punish them, why are they going to work? And that's it doesn't make sense to me.
Mm-hmm.
I get we do need as a country a better infrastructure, and yes, you have to pay for those things, so taxes do inevitably pay for them. But it just seems it makes it harder for you to go to work.
Mm-hmm.
Why are we going to work if we're having to pay for more that we're not going to see? It's quite interesting because it seems to be the public sector is getting quite a nice ride at the moment, and the private sector is what's having to fund it. Is that right? Don't think so. We need both. Don't get me wrong, but it's definitely going to limit businesses going forward for the next couple of years.
Okay. What do you think are some of the concerns business owners are going to have? You've also got national insurance increasing, minimum wage increasing.
It is going to be, the concerns will be the cost of staff.
Okay.
Having staff is going to be expensive, and so therefore naturally business owners will look to not put salaries up, will not look to recruit and drive the growth, which is a shame. And we were talking about this a couple of weeks ago, myself and my business partners, and we were saying, well, we're trying to let's change the narrative and say, actually, let's continue for the growth, and if you plan better, you can kind of know what the cost is going to be. Mm-hmm. But actually, you can plan for growth with efficiencies. Look at technology. So do you need to have more staff? And actually, could you have the staff you've got and increase the capacity, which then means increases their earnings, but because you've got the better processes and technology in place. Mm-hmm. So there is a way of doing it, but I think the first thought that business owners are going to have at the moment is why am I going to bother growing my business? I mean, the chancellor's already come out and said, you don't grow your business, you're going to be all right. That's not exactly what you want to see, is it?
No. I think for us internally, it's been quite interesting explaining to staff, because everyone was like, "Oh, there've been no tax increases," and it's like, "Well, you didn't see them on your payslip." No,
and then effectively, so then they got to see it. So they're so because of the way the tax increases are going to happen, and if I get into geeky, inflation is going to happen, which then means the staff are going to be worse off because we can't afford to pay staff more. Mm-hmm. So it's out their back pocket, effectively.
Yeah, it's a very smart way of putting it that they don't realise. But no, why do people go into business, and what do you think it takes to see it through?
Why do people go into business? I think people. For me, people go into business because they either want to earn a lot of money and then retire quicker, or if it funds their lifestyle. Go on a couple of holidays a year, spend more time with their family. If they've got children, be more present. The reality is, when you do the first couple of years, it's not like that at all. And so to see it through, you've got to have discipline and complete awareness of what's around you, because it's such a roller coaster journey. And I think a lot of determination to see it through is the key thing, because they always say the third year of business is the hardest year. Mm-hmm. And that's when a lot of people jack it in, because they're not making what they want to make.
Yeah.
But if you get past that, then yes, reality is, yes, you do see the other side and go from there. It takes people who are willing to take risks. I think it's the best way of describing it when setting up a business. Not because they're dodgy or anything like that. The risk being that they're going to go out and try and.
Well, that it's a risk and reward, isn't it?
Yeah, it is. Yeah. The more you put into it, the more likely they get rewarded.
Yeah.
But that eats into other things. Your personal life, you're always working, no matter how hard you try. And
what happened to I want to run my own business so I can set my own hours? Is that not a thing?
Well, that's why I did it. I thought I was, to be honest, it was. I was in another practice. My ex-bosses were brilliant, but I was kind of caught in between an internal political battle, one buying off the other. And I was doing all the work, and I was like, but I'm not getting the reward. And it wasn't because I was greedy and think I could do a better job. But I was then thought, well, actually, I'll do something now. I'll do it for myself. Mm-hmm. There is a better way of doing accountancy, but I could balance it better. Mm-hmm. Reality is, I'm a slave to my own job, my own business, and if I'm not when I'm not working, my staff want me. It means it's all the time.
Yeah.
So it can be done. It's just I think it's after 4 or 5 years, and then you've got to have the people around you to do it.
Mm-hmm.
But it's definitely the ones who succeed, and it goes back to you say what is success. The ones that succeed are the ones who see it through. It's their goal to make one of their goals, and they're determined to see it through.
That's fine. As a business owner, do you think you get better at solving problems, or do problems just get easier?
I think for me, it's definitely better at solving problems. You learn from your mistakes. Well, I definitely learn from my mistakes.
Mm-hmm.
I'm not perfect. I've made some bad mistakes over the years. As a business owner, with a coaching business, with the accountancy practice, it's. But very quickly, I'm very humble enough to know that I've got to learn from it, and because of that, then when there is a problem, it's so much easier to solve.
That's fine. How do you find managing a family life with being a business owner?
Difficult. If I'm honest, it's. I would say it was easier when my little girl was younger. Harder now because she's, Daddy, you're always working. But it's trying to explain to her that's the sacrifices you're making to be able to go on holidays. And have that time where you're not interrupted. To do things at the weekends that are really important, and allow her to go and experience different clubs, which is something I was fortunate enough to do. I don't think it's ever easy. I mean, I could easily, I think, disconnect myself from the business and spend more time with the family, but then that will I think will cause harm to the business because I'm the front of it, and that's not from an egotistical point of view. It's just I'm the one that's seen as the front, and therefore if I'm not there,
you're driving it.
then what does happen? So I'm always thinking about trying a better balance. Will I get there? Probably not.
Work in progress. In your opinion, on yourself or from all your clients, what do you think are 1 to 3 traits that it takes to be a business owner long term?
Selfish, because that's a trait. They're selfish because, and I know that it's not a bad thing. It's just they're going out there to do it for themselves. Definitely determined is a trait. Determination is a bit key trait, and a third one. Let me think. Willingness to learn is probably something that's overlooked.
Okay.
When you go into a business, I don't know about you. Sometimes you think, yes, I'm going to do this, and then actually you think about what you did a couple of years ago. You think, God, blimey! But that you've evolved because you've learned. Yeah,
no, definitely. Yeah, I think every you always need to be learning, and I definitely find myself being caught of being over optimistic about things. But you learn from that as well.
I think
in my opinion, everyone thinks. Well, maybe it's just me, but you always think it's going to work until it doesn't, and then you're like, okay, right, this didn't work. What do I need to change?
No, you're absolutely right. But that I think that's a characteristic people don't think about when they ask that question is the willingness to learn and learn from others. You can learn from your own staff. You can learn from other business owners. You're never going to learn it all. But just seeing how people do things and reflecting on what you do is will have a big impact.
Yeah.
The worst thing you can do is go, oh, they're doing that, I'm going to copy them. You kind of need to put your own spin on it.
Yeah.
But you definitely have to be, I think determination is a key thing. If you don't have that, then why, I don't understand why you're in business, which is ultimately what we ask. Why are you on this journey as a business owner? And 9 times out of 10, it's because they want a nice.
Yeah, they just look at the money.
It is.
Which is not always there, and
they see what their old bosses do. They got fed up with thinking, I'm not being told what to do, so I'm going to do it my way, and I believe it's a better way.
Yeah.
But then those businesses often fail because they won't listen. And I refer back to being selfish. I just mean that it's the discipline behind it.
Yeah, I think it's a good one because I don't know. I wouldn't like to call myself selfish.
No,
I wouldn't view it that way. But I understand what you're trying to say.
Yeah.
But I wouldn't describe the same back end traits that you're talking about?
Selfish being that you're going out and doing it. Selfish for you because you're doing it. Okay, so when you set up your business, did you not do it for yourself?
No, I'm very like prove a point-ish. I'm very prove a point-ish.
But you do it for yourself.
Yeah, no, I see the case. The case. Yeah, I just don't know if, for example, let's say if I made that a question on every single pod, 3 things. I don't know how many people would say selfish is one of the. You see what I'm saying?
No, I get that. I'm not disagreeing. I think it's just an interesting point of view that I have, that I think for you to be a business, if you're an unselfish person, you wouldn't make that leap to be a business owner, because you'd always put others first.
Yeah. Now I think about it, I'm not disagreeing.
And you stay in your job where you are because you're always there. It's being selfish to say, well, I'm going to go and do it. I'm not saying that you're selfish because you're now going to be, you don't care about anyone else, but it's that first point of, I'm going to look after myself by by starting that business. Yeah. Okay. Some may blame it to someone else.
I agree. Okay. What's next for James and GTA? What's the plan?
So the next year for us is definitely looking at the use of technology more in our practice. How AI is a big thing in our landscape at the moment for accountancy. We're at the early stages of using it. We're still learning about it, but it'll become more of the forefront of how we're working with clients. That will increase our capacity as a team without the need, hopefully, to recruit further. So that then means we as the team can do more client-facing roles. Yeah. So I call them mundane processes, but they will be sped up, which means more time on providing value for our clients. That's the plan for next year. The year after that, I don't know. For me personally, I've got obviously a few other things going on. I do work very closely with my professional body. I do a lot of work for them. So they've asked me to be part of the drive to recruit new members, and obviously I do my own podcast as well. And we're in the throes of just securing a sponsorship deal potentially to carry on doing it going forward.
How do you see, we touched on it a little bit before, how do you see accountancy in the next 5-10 years? How do you think it might change?
It's going to be more advisory, because the way technology in our industry is driving, the way AI is being used. So you're not seeing it very much now, but the once-a-year accountants are going to go. If you've got an accountant still doing that, then you don't know where your business is at. So it's definitely down the advisory route, and they're going to be much more present, and you'll probably find a lot more accountants who are good at talking to people rather than shying away and sitting behind a computer screen.
That's fine. Do you have any, as a business, do you have any financial targets you're trying to hit?
So yes, we are a business as well, so it's important that we do strive to our own targets. We want to make sure that we're growing, but part of it is we are allowing the team members to have a share of the profits. Okay. So the more we grow, the more they earn. Is
that official shares, or as in just in wages?
No, so basically it's like a bonus scheme.
Okay, yeah.
So, but from a selfish point of view, for me, I've also got to plan my exit, which is not immediate. Yeah. But I have to think my own journey as a business owner. So therefore, we are looking at potential ways of having an EMI scheme, which is obviously a way they can get shares in the business, or whether we just have an employer's ownership trust sitting there, so they're the trustees. So effectively, I'm planning my own exit at the same time.
Okay. Do you think, this is a question I find interesting, where they have heard you talk about your exit? I'm assuming they've heard you talk.
I'm very honest.
Do you think that has an impact to them if they're working for somebody that's thinking about their exit?
No, I think it's important they understand that from the start. As much as I'm the face of the business, I need them to be doing it as well. I need them to be present. It can't all be on me. So if it's always me, then and something was to happen to me, it sounds all very morbid, but what happens? So I need them to be doing what I'm doing. Yeah. So I honestly say that at some point I'm not here. And the best way to say it is my own exit strategy. I plan to be exiting in 10, 15 years' time. Yep. So for them, it hopefully incentivises them to grow, to take over from me. And that's always the plan.
Mm-hmm.
Danger is they could go off and do their own thing. It's the joys of having people you employ.
Yeah, no, of course.
But no, I don't shy away from that. I don't do it on a regular basis. I'm going to exit, but it's important they understand what I want to do as a business owner and where I want to be. Because either your staff buy in or they don't, and I can then quickly understand which staff I want to keep as well.
Yeah. So in 10, 15 years, that's when you go to Dubai, is it?
If they allow me to go there, and the rules haven't changed.
No, that's all cool. That's everything. Thank you very much, James.
Thank you.
Thank you for having me on the pod.
Thank you.